How to consolidate and lower your credit card interest rates. If you're like most people, you have at least one credit card. And if you're like most people, you probably don't enjoy paying interest on that card. In fact, the average American household pays over $1,000 in credit card interest every year. But what if there were a way to dramatically reduce or even eliminate your credit card interest payments? Believe it or not, there is, and all you need is a little bit of information and some elbow grease. So read on to learn how to consolidate and lower your credit card interest rates. First, let's take a look at what credit card consolidation is. In a nutshell, credit card consolidation is the process of taking multiple high-interest credit cards and transferring their balances onto a single low-interest card. This has the effect of drastically reducing your interest payments, as you'll only be paying interest on one card instead of many. There are two main ways to consolidate your credit cards. You can do it yourself, or you can use a consolidation service. If you decide to go the DIY route, you'll need to find a low-interest credit card and transfer your balances onto it. You can usually do this by calling your credit card companies and asking for a balance transfer. If you decide to use a consolidation service, they will do the work for you. They'll find a low-interest credit card and transfer your balances onto it, and then they'll make the monthly payments for you. The benefit of using a consolidation service is that it can save you time and hassle, but it will also cost you a bit of money. Either way you choose to consolidate your credit cards, the end result will be lower interest payments and a simpler monthly bill. So if you're tired of paying too much in interest, consider consolidating your credit cards today. What you need to know about consolidating and lowering your credit card interest rates. If you have multiple credit cards, you may be considering consolidating them into a single account. This can be a good way to simplify your finances and save money on interest. But before you consolidate, there are a few things you need to know. First, make sure you understand the terms of your consolidated loan. Some consolidation loans have adjustable interest rates, which means your payments could go up if rates increase. Also, be aware that consolidating your credit cards will not improve your credit score. In fact, it could actually lower your score if you close existing accounts and open a new one. So if your goal is to improve your credit, consolidating may not be the best option. Instead, focus on making timely payments and maintaining a low balance on all of your accounts. These positive habits will help to gradually improve your score over time. The benefits of consolidating and lowering your credit card interest rates. Consolidating your debt can help you to lower your interest rates. This is because when you consolidate your debt, you are essentially taking out one big loan to pay off all of your smaller loans. Your credit card companies will often offer you a lower interest rate on this big loan than they would on each of your individual loans. In addition, consolidating your debt can help you to simplify your financial life. Rather than making multiple payments each month, you will only have to make one payment. This can make it easier to stay on top of your finances and avoid late fees. Finally, consolidating your debt can help you to save money in the long run. When you consolidate your debt, you may be able to get a lower interest rate, which will save you money over time. In addition, by simplifying your finances, you may also be able to save money on late fees and other penalties. All of these factors can add up to significant savings over time. As you can see, there are many benefits to consolidating and lowering your credit card interest rates. If you are struggling with high interest rates and multiple payments each month, consolidating your debt may be the right solution for you. How to save money by consolidating and lowering your credit card interest rates. You probably have multiple credit cards with different interest rates. And if you're carrying a balance on any of those cards, you're likely paying a lot in interest charges every month. But did you know that there's a way to consolidate your credit card debt and lower your interest rates? It's called a balance transfer. A balance transfer is simply a process of transferring the balance of one credit card to another card with a lower interest rate. This can help you save money on interest charges, and it can also help you pay off your debt faster. But how do you know if a balance transfer is right for you? First, take a look at the interest rates on all of your credit cards. If any of them have an interest rate that's higher than about 15%, a balance transfer could be a good option. Second, make sure you understand the terms of the balance transfer. Some cards charge a fee for the transfer, and others require you to maintain a minimum balance. Finally, consider whether you can qualify for a 0% introductory APR on the new card. This could save you even more money on interest charges. If you're looking for ways to save money and get out of debt faster, a balance transfer could be the answer. Just make sure you do your homework before making the switch. Alternatives to consolidating your credit cards. One popular method of dealing with credit card debt is to consolidate all of your cards into a single account. This can be a good way to get a lower interest rate and simplify your monthly payments. However, there are also several potential drawbacks to this approach. For one thing, it can be difficult to qualify for a consolidation loan if you have bad credit. Additionally, consolidating your cards can actually lead to increased debt in the long run if you're not careful. If you're looking for alternatives to consolidating your credit cards, here are a few options to consider. One option is to transfer your balance to a low-interest credit card. This can be a good way to save money on interest and reduce your monthly payments. Another option is to negotiate with your creditors to try and get a lower interest rate or waive late fees. Finally, you could also consider seeking professional help from a credit counseling service. Whichever route you decide to take, the important thing is to take action and get your debt under control and manage your finances more responsibly. There are a few different options available to those looking for consolidating their credit cards. Some people may find help from professional credit counseling services. No matter what route you decide to take, it's important to remember that taking action is the most important step. If you're looking for ways to save money and get out of debt faster, a balance transfer could be the answer. Just make sure to check out my channel for more tips on how to get out of debt and save money. And don't forget to subscribe.